Good morning, Story Trading VIP, Team VIP. It's March 2nd, Thursday, March 2nd. We got a lot of stuff to cover. Tectonic news coming out of Tesla that's impacting our once favorite stock, AIR. We'll get to that in just a minute. Maybe we'll have a surprise guest. I don't know. I contacted Gain Erickson, CEO of AIR, sent him the link to our studio. Haven't had a response yet, but you never know, so stay tuned. But anyway, looking at the markets real quick, just so we can get out of the way. SPY QQQ down, and I think we're below key levels. I haven't looked at the charts yet this morning. I'm looking at it with you the first time, and yes, QQQ below the 200 DMA. Not good. You see support there, though, at the 50 DMA at about 285, 286. And then let's check SPY. SPY also below the 200 DMA this morning. Not good. Let's go to the weeklies, though. Let me change this to the weeklies because right on the 20-week moving average. So there is some support right here. But I think I told you guys last week that when we broke below the 50-week, I was worried about moving to the 200-week moving average because of the fundamentals, because of higher interest rates, risk of recession, yada, yada, right? I was like, if we're getting out of this bull channel, which we thought, okay, we broke above the 50, we have the all clear, we break below that, then I'm thinking we got to test the possibility. And, the bears are thinking, no, if we're not going bull, we're going bear. What does going bear mean? It means going below the 200-week moving average. So if that's what the bears are shooting for, and I know that's what they're shooting for, then at least I think you have the possibility to at least test it. So that was my worry. We're sitting here on the 20 weeks, so I'm kind of still leaning bearish right now. It's been a couple weeks I've been leaning bearish. SPY QQQ, and we're seeing for the immediacy right now in pre-market, we're seeing rates up with UUP, which is not good. TLT down, UUP up, UUP again, not good for risk assets. And we monitor that by looking at ARK-K and Bitcoin, the two biggest risk assets we know. So things not looking great from an overall market perspective. Now to the big news of the day. We had Tesla on Big Watch last night. We did say we predicted that the peak would most likely come yesterday. Well, that happened. Well, we didn't get the run up. We wanted to run up to like 210 or more. We didn't get that, but pretty much knew that that would be the peak, meaning you're not going to get higher than that. Once the event comes, this is a typical playbook. And because the stock's been up so much, it doubled from like 100 to 200, you would really need a great event for the stock to keep going. So this is pretty expected. And I did sell a good chunk of my Tesla over the last week or so. I still have a little bit left, but I did sell probably 75% of it, anticipating this move after the event. So now we're below the 20-day moving average here. And you can see it's right at a support level, 187. You can see right here, bounced off of it on February 13th. Tesla did at 187. And there's a risk we can go down to the 50 week moving average at 160. So Tesla right now, and I will tell you, I spent about 4 hours last night listening to bulls and bears talking about Tesla on Twitter Spaces. Okay, so I got my finger on the pulse of the sentiment of this stock. And, I can tell you again, we were at valuations that were a little bit stretched at 200. And to keep that going, you gotta convince the bears. You gotta come out. What are the bears worried about? They're worried about numbers, right? Not the idea, not what they're gonna do one day, but they're worried about cash flow. That's what the bears look at when they say, "Oh, Tesla's expensive." And guess what? At Investor Day yesterday, they didn't talk about economics at all. Nothing about the cash flow. Nothing about prices. Nothing. It was all about the product. So bears got very emboldened by that. And that's why I think this is positioned to perhaps move to that 50-week moving average. And, nothing's a guarantee. On the bull side, the presentations last night was all about making their next generation, not all about, but a big chunk of it, making their next generation vehicle really affordable, mass market vehicle. And that long term is really, really good for Tesla. Okay, so, the bulls will still have a reason to hang on to this. But the question is, where does it go today? Does it go down first? And obviously, it's going down first. At a support 187. If that kind of breaks, if we break 186, 187 here, then I think over the next few days it could make a move to 160-ish, 161. Now, tectonic news associated with Tesla's efforts to make their next generation vehicle cheaper. Two things that they're doing in order to do that. They said that they have found a way to make their vehicles, at least I think their battery, one item was rare earth material free, rare earth mineral. What do you call rare earths? Okay, so rare earth materials. The no rare earths. All right, no rare earths in their batteries. So that is MP, pure play on rare earths, and you can see that's getting clobbered this morning, down $4.50, down 12% below the 200 DMA, and you can see the 50 DMA there at $30. I think is definitely in play on this no rare earths. But the bigger thing that's really rocking a lot of companies, they said they found a way to make their next, their cheaper, I think Model 2, they call it, electric vehicle with 75% less silicon carbide. And you can see the impact right now on Wolf, Air, STM, microelectronics. I anticipate CVV as well will go down. Now, when I heard this news, man, I unfortunately, I did not listen to Tesla stuff live. I only saw a news report at like 8:23 p.m. And obviously, if I saw it earlier, I would have sold Air at $35 in after hours last night. Some people were watching it live. It dropped $1 from 36 to 35. What a gift. So obviously in this game, you work harder, you make more money. So I just didn't have the opportunity. I had other things going on. I couldn't listen to the show live, but that's a no-brainer. That's something you don't need validation from the market. You don't need to talk to anybody else. You don't need to see the price coming down first. You see it only down 36 to 35. That's a gift from heaven. If you had that opportunity to sell Air at 35, but I didn't. And I knew for sure this thing was heading down in a big way. I sold all of my Air shares this morning. Different prices. My average is probably around 30, a little over $30 probably. I sold all my share Air at a little over 30 after holding it for a very, very, very long time. Right. This is basically my favorite stock that I've held for a long time. So, look, I think this news is as impactful or close to as impactful as the news was for SMSI the other day. SMSI saying they lost the T1. Look what happened to the stock. I saw that news. I sold at $2, everything right at the open, and it went down to now to 136. So that was a massive percentage move down, over 50% down. I think this news is just as impactful. Remember, Air is extremely overvalued, okay, on traditional metrics. And why is it extremely overvalued? Because look at the PE, 77. That's a trailing PE, because people are expecting explosive growth. So now this is new information, right? We believe markets are efficient. So yesterday it was priced right at $36. Today it's 75% less silicon carbide. No one knew that before. So that has to be priced in. It has to be priced into the market. So it might take a little time on this. It's 9:09, but I got a lot to say. Okay. So in any case, listen, one of the things I've learned is when the thesis changes, I'm a story trader. It changes, I sell. All right. I'm not looking at the technicals. I'm getting out as fast as I can when the story changes. Right. Because this play was about silicon carbide exploding over the next few years. And I was looking forward to $50 to $150 price target. Now, here's the thing. Before we get into technicals and price targets, they have silicon photonics, which is the optionality upside, which could really take the stock to over $50 in 2024. And that is where the conversation is going to go next, right? Because I'm not sure what Gain can say about 75% less silicon carbide. He can come in and say, well, yeah, but it's still overall a lot more growth. Oh, the cars will be cheaper, so the volume will be bigger, or they won't be successful at it. It doesn't matter. The headline is horrific as far as sentiment goes, and sentiment matters, okay? And the bottom line is it's less silicon carbide unless you make crazy assumptions about now growth is going to explode even more. And I don't think people I don't think those assumptions were there. People were counting on cheaper electric vehicles, a cheaper version from Tesla in order for EVs to grow and explode. So, but here's the thing. This is, as we talked about, we always talk about that the technicals reflect the fundamentals. If you have a fundamental inflection point in the company, let's say it's positive, then the stock should go over key moving averages, right? And usually that's whether it's the 50-day moving average or the 200-day moving average, or even better, the 50-week or 200-week moving average, even better, right? You get into that bull channel if you have fundamental news that's transformative for the upside. And now I think we see the opposite right now. You have fundamental news that's transformatively bad for air to the downside. I'm going to come back to silicon photonics in a second. All right. So at least for today, for right now, because silicon photonics is not right here today, it's speculative, right? So for today, you can expect the stock to break long-term moving averages to the downside. The first big one you see is the 50-week moving average at $30. So as a story trader, we think about those four pillars and we anticipate the technical break below 30, which is what I did this morning. We're below 30 right now. 30 is now support. Now, here's the problem. If we go to, let's put this back on the daily. All right, now we're below the 50 DMA. What's the next big moving average? It's the 200 DMA down here at 19. But not only that, but what does the 200 DMA represent? It represents a demarcation line between strong fundamentals and weak fundamentals, right? And not just fundamentals, but strong overall bullish sentiment, combination of fundamentals and sentiment, bullish investor sentiment overall with all the four pillars, right? You're above it. And if it's bearish sentiment, you're below. So I think there's a very good chance. We have different support levels here. We have $27, a very strong one. We have this support here at 21, very strong. And then you go to like 19 and rising at 200 DMA. But I think there's a very strong bear case to make that the bears are going to say, this stock should be below the 200 DMA. I'm going to short this thing. I'm going to short this thing in the ground. It's going to go below the 200 DMA. So that's the market psychology. I care about what other people think about, not what I think about, right? So I'm thinking that's what other investors are thinking. So there's a good chance that you're going to see this stock make a big move towards that 200 DMA. Now, in what time period? I don't know. Look at this, but there's precedence. Look at the monthly candles back here in January of 2022. Now, that was for a different reason, but the stock went from 25 to 10 in a month, okay? Maybe it was even sooner than a month. That's a monthly candle. I'm not sure how quickly it took. So there is precedence to say, hey, it won't be. If you imagine a monthly candle going to $20 on this chart, it's actually not a big deal. You're actually still in a bull channel. If you go to $20, you're still long-term bull. You're still above that 200 DMA. So it's not really that big of a deal to move down to $20. Okay? So because of those reasons, I am looking to short air. I was hoping the stock would open 32, 33, so I could like pile into puts. But the stock's now 29. It's below 30. Now 30 is resistance, so maybe you get a bounce to 30, and that's where you short it. But it's a little hard with the stock down 20%. But I have a bear bias on this stock now, looking to short it down. Now, it doesn't mean the stock is dead forever because you have silicon photonics, right? And Gain has said silicon photonics is like multitudes bigger than silicon carbide. Their market opportunity, multitudes bigger than silicon carbide. So if that comes through for them, this can still be a $50 plus stock next year. But it's completely speculative. We can't put money on that right now. So we have to talk to Gain. We have to look for press releases, and maybe he'll be encouraged and emboldened to come out and say some things about silicon photonics now to get the stock price up. But for now, I got a bearish bias. Now, other things that Wolf seems like very high exposure. Look, all these are going down. I don't know these companies well. There's by silicon carbide. If you look at what they do, STM and Wolf seems to have much more pure play exposure to silicon carbide, and it makes sense that why it's down more, 10%. So, all of these, I think, could have much lower to go. Like, this is monumental news. This is tectonic news. So, to me, you have to go to a 52-week low on Wolf, right? This is a fundamental shift in the news. So, for 52-week low was here at like 60, 58. Like, I would anticipate Wolf to go below those levels, right? So, like Air, I think there's more downside in Wolf. So these things are shortable today, especially on bounces. Now, also CVV, I anticipate getting hit hard. That's probably like a one share paint or something. They're involved in silicon carbide production. We're waiting for a pullback to 10 to get in because it seems there are machines for silicon carbide production. There's something inflecting over there. But with this kind of news, I don't know, man. I think it could break that 10 and go below. And I'm not sure, I want to be anything silicon carbide right now until we give things a chance to really settle down and find a new support level. So that's the story over there. Now, CRM, a rapid re-rating play on earnings. The guidance for 2023 was 22% higher, 22% higher than 2022, analysts estimates. And you know what we do here, because we believe markets are efficient, and yesterday's price was the correct price. We say, hey, the stock should go up 22%. But I'm going to modify this one a little bit. And by the way, if you do 22% on this, it's about 205 from yesterday's close, right? 205. We're now at 195. Now, there are a lot of analyst upgrades coming out yesterday. We had a 225 price target, 190, 250, 250, 250, 240, 225, 240. A lot of them, 240, 230. Big price targets well above 200. So it's not a reach to say 22% on top of yesterday takes you to 205. But I'm going to throw a little wrinkle in here. I think this leaked. Someone knew that this was going to be good. We are at steady state here on CRM at about $163 for many days. And right before earnings yesterday, the thing just shot up in the morning, but also towards the end of the day. So if you say maybe the fair market value is actually 163, not the close at 168, right? So maybe you apply the 22% to 163. And what do you get if you do that? You get about 199, 198, 199 or so. So I'm going to propose that the re-rating play today is in a range of like 199 to 205, rather than saying straight 205. Now we try to triangulate that with the technicals. And when we triangulate that with the technicals, we see that there is resistance here at 195, very strong resistance at 195. Okay, so maybe it doesn't get past 195, but also 195 is a magnet. So it's moving towards 195. When we put out this formula for you last night, the stock was 192. So it's already up $3 from 192 to 195 since we did the quick math. Now, if you break 195, you have room to move towards those calculated targets that I made of like 199 to 205. And those are in play. You got to see, though, if it breaks 195. So far, we are right for $3 from 192 to 195 and a potential for another $5 or so of appreciation if it breaks and holds. If 195 becomes support here early in the day, potentially you can see that rapid move towards 200. Okay, that's how we do it, story trading style. All right. Okay. What else can we talk about here? There's news on YEXT. It was very strong the last couple of days. Man, what a sneak attack after that big move a few weeks ago and a pullback. It looked like it was like really boring and dead. Then in a matter of 2 days, you're right near the 52-week high. So they have earnings coming up March 7th. I think that's Monday. They have Investor Day on April 4th. And then this morning, they put out a press release. YEXT announces the first content management system that generates its own content. And I just want to say here, looking at the technicals, the RSI is still relatively low, 68 compared to historically where it went in that last run, 85. So I think because of this low RSI, there's a chance to test that 52-week high of 820, only 30 cents from here, before the earnings report on Monday. Okay, I can't predict that it will break 830. That's a tall order to say we're going to break resistance before we get earnings news. But on the other hand, there was news this morning on GPT here. If you look at this, GPT-3 is included in their technology here. So I think this has an upward bias with a possible test of 820. Maybe you break 820, but I'm not sure you do. We'll see. Okay, so YEXT. Now, Celsius had bad news yesterday, and actually I'm considering selling some of my core IRA shares. If I wasn't so busy with Tesla and AIR and everything, maybe I would have already done that. Why? Because you can see Q4 EPS was a miss, but more concerning, this is a growth company. The sales was a miss, but it was basically in line, 178 to 179. You're a growth company. You can't be in line on sales, especially with Celsius that has a history of blowing away the top line. They have that history, and this time they didn't do it. That's a huge sentiment killer and also can impact company's worth. It is very overvalued based on traditional fundamental metrics, and it is below the 200 DMA. Man, we said we were worried about this earnings because it broke below the 200 DMA before the earnings report. To me, I was like, hey, maybe that's inside information, because we keep talking about the significance of the 200 DMA. Why would he go below the 200 DMA on 2 occasions, like 5 days ago and then again yesterday, before the earnings report came out? Only if there was good intelligence out there that it was going to be a miss. So I'm not happy with this Celsius report. I'm not happy with being below the 200 DMA, and I may be looking to reduce some of my Celsius shares in regular hours once that gets going. A couple other things to mention. Drio, they just put news out this morning that their earnings will be next Thursday. That's way earlier than I thought. I thought it was going to be the 3rd week of March, so maybe that's a good thing that they're ready to go ahead of schedule. Also, Monday, they are going to be at a fireside chat that'll be webcasted at a Cowen conference. That's going to be Monday, Cowen conference, Thursday morning earnings. And I'm thinking with those 2 catalysts that Drio will not really get that much hurt today. I think it can hold up in the bloodbath that's going on in the market because of those catalysts coming up. ANIX has been a big winner over here. Last night and after hours, man, this thing was over $5. So on it wasn't like it was on nice amount of shares too. It wasn't like 1 share, 2 share paint jobs. It was like real traders. So this is interesting. Still holding this. I think I put my price predictions in the VIP chat room, but like 5 to 550, is kind of what I'm thinking before the data comes out. I'd be surprised if we get to 6+ before the data comes out in mid-April. So making some good money. If it goes up a little bit more into that range, maybe I'll take some off, maybe sell half, and then wait for the data in mid-April. LLAP, we had that big event yesterday on Zoom. You can see it in the archives of the app. A really great event with Julian and with Sanjay. Sanjay came well prepared with a ton of fundamental information, ton of research, which actually kind of made me even more convicted that this is ultimately going to work out. But it broke 256 support yesterday, so your next support's at 215. And and Julian did make his case about the customer, Reliant, I think it's called, whoever the name of that customer is, this 2.4 billion deal. He made his point, right? That Rivada, that maybe it's not, they don't have the financing in place. Maybe it's not a fully legitimate contract. Okay, he's a skeptic. I get it. And the fact that the fundamentals did not hold 250, 256, it basically shows you a lot of people are skeptical as well. And he did point to a lawsuit that Rivada is embroiled in, which may have something to do with this. But my take is Lockheed Martin owns 1/3 of this company. So LLAP is not going to be making, bad deals with companies when 1/3 of their shares are. Look how they have to answer to them. Right? They're not just an investor; they own 1/3 of the company. So you have to adhere to a certain level of, work and a certain level of credibility. With your 1/3 investor, you can't be going around and signing deals that don't have backing. In my opinion, I think LLAP vetted this customer very well. They vetted the lawsuit. They vetted their financials. This is my opinion. Julian doesn't agree with me. He thinks it doesn't matter that Lockheed owns 1/3 and that they would take any deal just to put a press release out there, even if there is no financial backing for the deal, just so they can pump their stock price up. That's a very cynical view I don't share, but so far the market agrees with him. And the 215 is your support level, double support. It's both the 20 DMA and the top of this candle. And I really do not expect the stock to go below 215. I think that'll probably be a great entry if you're not in it already. And who knows, I may even average down at 215. That's my take. Julian's take, Sanjay's take. You can listen to the replay in the community section under archives, under events, and then archives. All right, we got ASUR software on watch. This has been doing great. Apparently, they do better in higher interest rate environments, which is a note that we took away from the CEO interview and something that Chris reiterated after listening to the earnings conference call the other day. So maybe this is a stock. Maybe it's a stock that can buck the trend. Not necessarily counting on that, not trading it. I do own it in my long-term IRA account. And that's it, folks. Crazy day. Let's see if I'm going to see if I can make some money. Obviously, I would have liked to sell air at 35 last night if I saw the news, if I was around. So I sold it at 30. So I'm a little salty about the $5 a share I missed because I knew to sell it at 35. I was going to sell at 35. I knew about it. I didn't need the market to tell me it was going to go down. That was obvious. So I'm a little salty that I lost $5 a share. So I'm going to see if there's opportunities to short air on pops today. I'm going to see if there's opportunities to short Wolf, to short MP on pops today, maybe to short STM on pops today. Good luck, guys. Thanks for joining. Market ain't easy. All right. But we're here doing our best, explaining markets and empowering you to make better trading decisions. We'll see you today at 4 p.m.